James, I don't have this reminder in my council notes. I should incorporate it. Whose idea was that? Will the Special Committee on Real Property Tax Reform please reconvene? This is the November 13th, 2025 meeting. It's 9:49 a.m. And I believe we have a testifier on the line. Mr. Helton? Oh.
Yes.
Thank you for hanging in there. You may proceed.
Okay, I will restart. So thank you, Chair and Vice Chair and members of the committee for letting me testify today. I'm Jonathan Helton and I represent the Grassroots Institute of Hawaii. We are in support of Bill 171, which would extend some of the tax waivers for those who were affected by the Lahaina wildfires. There are a lot of things I'm going to say about this bill. Just real quick, why we support this bill. A lot of folks have been unable to rebuild so far, either because of regulatory issues in getting their permits, or because they haven't been able to figure out their insurance, or because they haven't been able to secure a contractor. But for whatever reason, a lot of properties that are both Makai and Mauka of the highway have been unable to rebuild. So we support extending these waivers. I want to offer two comments on the bill text itself. I mentioned these in the written testimony. And I think the bill would benefit from two main amendments. The first is in the proposed subsection E. The bill limits the tax waivers to properties that are either in the special management area in one of the county historic districts or that are on the shoreline. And now the challenge here is that you have a lot of properties that fall outside of those areas that were destroyed and have been unable to rebuild. Essentially, the SMA line, it covers everything that is Makai of the highway. So everything Mauka of the highway under this provision of the bill would be unable to receive any of the tax break or tax waiver for the next 2 years. Just by matter of fairness, I think that properties that were destroyed and have been unable to rebuild should receive the same treatment, no matter where they're located. So that's the first thing I want to mention. The second thing I want to mention is a little bit more technical. Under the proposed section F in the bill, it mentions that properties that receive a certificate of occupancy or a final inspection during a year would have their property tax waiver canceled for that year. So for example, if a property were to rebuild in, say, May of 2027, and that's when it got its certificate of occupancy approved, for the fiscal year that began in July 1st, 2026 and ran until June 30th, 2027, that property would have to pay the full year's worth of property tax. Now, the Grassroots Institute of Hawaii doesn't have a problem with someone who has rebuilt their home or business paying the property tax on it. We do think it would be fair, though, that that should be prorated based on the month in which you rebuild. So if you build in May, you only have real use of your property for 2 months of that tax year. You shouldn't have to pay the full amount of taxes for the entire year. So those are the two changes we would suggest to the bill. I'm happy to answer any questions.
Any clarifying questions, members? No questions. Thank you very much. Appreciate your testimony.
Thank you.
Next testifier.
Chair, the next person signed up to testify is McKinley Eads, to be followed by Autumn Ness.
Hello, Council. I'm also testifying in support of Bill 171. I agree with everything Jonathan had to say. I think it would be unfair if properties that were entirely destroyed were left out just because of SMA line or historic line boundaries. And I agree that the exemption should be prorated based on the month of rebuild. I'm a project manager for one of the properties on Front Street, so I know firsthand how hard it has been to rebuild. For more context, even the Bill 110 you guys heard relating to public improvements, that hasn't been fully passed yet. And stuff like that has really been slowing down our rebuild process. So I think that this would be a really fair way to just kind of have some relief for these property owners. So I hope you guys vote in support. Thank you.
Any questions, members? If not, thank you. Next.
Chair, the last person we have signed up to testify is Autumn Ness.
Aloha Committee. My name is Autumn Ness. I'm testifying on behalf of Lahaina Community Land Trust on two different items. One is Bill 169 in full support. Thank you so much for bringing this up. I have to say, it kind of surprised me. One of the most common questions I get from folks when we talk about community land trust homes, almost and maybe more than like the resale value calculations, is what about property taxes? Who pays them? How much are they? Like, that's how much people feel the effect of homeowner property taxes, especially in a community where values are rising so quickly. Our most conservative calculations say that, oh, thank you, Auntie. Sorry, some clients are leaving. Some of our most conservative calculations say that a regular old house is going to be worth $3 million in Lahaina in 15 years. That's conservative math. And land trust houses in 15 years are going to be worth more like $400,000 to $600,000. So asking a land trust owned homeowner to pay property taxes on a $3 million valuation when they're only able to pull $400,000 or $600,000 of equity out of their home is a little wild. Also, it's really a national best practice. I have with me this book called Preserving Affordable Homeownership, Municipal Partnerships with Community Land Trusts. It's a policy report published by the Lincoln Institute of Land Policy. There's an entire section on local taxation of CLT lands and homes. And it goes through, there's like a fancy table right here that talks about there's 51 municipalities on record with the most successful community land trusts, where property taxes on owner-occupied housing take into account long-term affordability restrictions imposed on these homes. It's just a national best practice, and I really applaud this committee for doing what it can to bring our current tax structure in line with what everyone across the country is doing. While I'm here, I also want to testify in full support of Bill 146. I just got a call maybe last week from a realtor and a lender working with someone with a ho'okumuho voucher, a shopping letter to buy a house. And the thing that was preventing them from being approved for the amount that they needed to come in and finish the purchase of the home was the anticipated property taxes, because the home that they're trying to buy was previously non-owner occupied. I don't know the details if it was a short-term rental or not, but that was the thing that was like preventing them from being able to qualify for the rest of the mortgage they need. If the lender knew that this person could buy the home and immediately apply for a homeowner exemption, the lender would feel comfortable with approving the rest of the loan that they need for the purchase. So this has real-time, current, timely implications. So I actually only saw it on the agenda right now. I didn't look at the effective date. If the effective date is long, can we please make it effective immediately? Because I just know that people have these shopping letters in their hands right now, and this is going to be a major factor in their ability to use them. Thank you.
Thank you, Autumn. We have a question from Vice Chair Sugimura.
Nice seeing you, Autumn. Good morning. Thanks for your good work in the community. What was the name of your book so we can do a Google search and buy it, or do you have copies for us?
Oh, I can drop a copy. I'm glad that you want one. I will. I have at least 2 copies in the office, and I've read them already, so I can bring them in if you'd like.
Okay. Thank you.
Okay.
Any more questions? If not, thank you. Next testifier.
Chair, the next person signed up to testify is Alan Lloyd in the chamber.
right. I just got here, so let me change my glasses. Handouts for council members. All right, good morning. Aloha, council members and staff and audience. I'm here to testify on Bill 168 of this year, 2025. My name is Alan Lloyd. I'm a resident of Wailuku. I'm speaking for myself and the Maui Democratic Socialists. Something needs to be done about high rents in Maui. You can see from the handouts that you have, rents have gone up in 2025. We also know that condo and home values have gone down. So even though those values have gone down, rents have still gone up. Here are my concerns about Bill 168 under your consideration. The exemptions of $100,000 are too low to incentivize landlords to offer rent at 70% FMR. Ideally, to incentivize landlords enough to reduce rent, the property should be totally exempt, similar to what was offered to Lahaina fire survivor, to the property owners to house Lahaina fire survivors. Second, at a minimum, the property owner who lives on the property should be offered the home exemption, owner-occupied exemption of $300,000 and the long-term rental exemption of $200,000 together. Third, realistically, the exemption is not enough to incentivize landlords to participate. Landlords can make more income without using the exemption. So all property owners that rent to tenants should be required to participate. So my next point. The property tax exemption is voluntary for landlords. They must be required to participate, or enough will not. And so they must be required to participate to create affordable rents and, as of the purpose of this bill, to increase affordable housing. History has proven this true. A total property exemption was offered to landlords to house fire survivors. Only 6% of those offered took that exemption. That 6% is from information from a council member's staff that shared that with me. Next, we do support that the property's rent be no more than 70% of the fair market rent. Let's see, next. Councilmember Kama had proposed legislation that's very similar. Part of the language in her legislation included that there should be certification from the Department of Housing that the rent the landlord is charging meets the bill requirements. This bill does not have that. My question is, how will the director validate the rent amounts in this bill? Second, that bill called for a deadline when landlords can state the rent amount to get the exemption. There is no deadline in this bill. Lastly, I have a question. What does it mean when it says in the bill, property is totally exempt? Does it mean that the owner is exempt from all property taxes? It'd be good if I could get that question answered. Mahalo for your time.
Thank you. Are there any questions? If not, thank you very much for this information.
Thank you.
Next.
Chair, there's currently no one else signed up to testify, but I do see an individual in the gallery indicating they'd like to testify.
Good morning, Council, J.C. Law. I know, I hope you guys are having a nice day and all. I'm not real clear today. Maybe it's the rain and stuff. So I didn't really have a really good testimony, except for like my personal experience. And so here's the Hawaiian word of the day is ohuma, ohuma humu, namu namu, kunu kunu, ohala hala, nuku, and nuku ho'omau. And that was from the Kukui Albert Dictionary, and that mean all those words they all mean grumble. So I appreciate you, Chair Lee, when you I knew it was going to be some work for you guys. So appreciate everybody that was volunteered to be on this committee. And I didn't have much time to go over these like real with a fine tooth comb. And I appreciate all the other testifiers that took time to come here. So saying that, I realize it's like the rules of the council is, I didn't read all the bills, and what I'm trying to say, but I have here Exhibit A for you guys, and I'll try to make copies out of the August 15, 2025 Hawaii Catholic Herald. They're advertising 2 burial plots for $12,000. And I'm back on that thing about the nonprofit religious organizations, and I'm wondering how come they're selling plots for dead people, but they can't seem to afford any help for the live people. So I'm trying to get somewhere. So I'm not going to grumble. I'm trying to have some. I know it's a tough one to fight the Roman Catholics, but here's some constructive criticism. We're lucky that we live in Hawaii, and we're lucky we have that Department of OEV resources now, because I believe we can get around that U.S. government thing about the restriction on making laws for religious organizations. And if we do it right, we can maybe charge the religious organizations, if they're not, we set up some criteria for them to follow, and if they don't meet it, then they have to pay an OEV tax. So how's that?
Questions? No questions. Next testifier.
Chair, the next person we have signed up to testify is Robert Bentz on Teams.
Aloha, council members. I'm in support of the continued exemption for the fire victims. This morning, I forwarded an email to council members Sugamura and Johnson, asking if we could please amend section 3.48.485. This might have gone into the spam file because I also forwarded a Maui article from U-Hero about disabled Maui residents are still facing barriers 2 years post-wildfire. I believe it's section 3.48485. The current exemption for those with total disability is only $25,000. If that could be amended so that we only pay the minimum tax, $150, that would help a lot of, there's probably not very many of us low-income, local, totally disabled that are fortunate enough to own, but the property taxes can be really hard for those of us that are mahalo.
We have a question from Member Johnson.
Thank you, Chair. Good morning, Mr. Benz. Thanks for your testimony. Always looking forward to hear it. And I did receive your email. I just checked and we did get it. So thanks for that.
Any more questions? Thank you. Next testifier.
Chair, there's currently no one else signed up to testify at the beginning of the meeting, so we'll do a last call. If there is anybody else who would like to testify at the beginning of the meeting, please identify yourself now. On Teams, you can do that by using the raise hand function. We'll do a countdown. 3, 2, 1. Chair, there's no one else to testify at the beginning of the meeting.
Members, any objections to closing public testimony at the beginning of the meeting and accepting written testimony? So ordered. Staff? Are we going to be taking up the first item then?
Yes, Chair. The first item on your agenda is RPTR 13 for Bill 170, establishing a new circuit breaker tax credit category.
Okay, so members, I'll be reading the description and then I'll be introducing the Director of Finance and the Real Property Tax Administrator to give some comments. But right after, let's say, Director Martin, I'm going to take a recess, okay? So RPT 13, Bill 170, 2025, establishing a new circuit breaker tax credit category. Bill 170 establishes a new circuit breaker tax credit for qualified homeowners. The credit equals the amount by which the previous tax year's real property taxes exceed either 2% of household income or the minimum tax, whichever is greater. The credit is capped at $10,000. Now, joining us today to assist with our discussion on this item, as well as all other items on our agenda, is Marcy Martin, Director of Finance, and Carrie Stockwell, County Real Property Tax Administrator. Can we begin with comments from you, Director, and then we're going to take a short recess. Ms. Martin.
Thank you, Chair. The department worked with Councilmember Gabe Johnson on a gap that we recognized was for property owners who've owned their property for a long time and have building values that exceed the building value threshold that existed under the original circuit breaker. So this is an additional circuit breaker with some lower criteria and some higher criteria. And Carrie worked on this as well, so I'll let her speak. Carrie Stockwell.
Okay, so the criteria for this bill for the circuit breaker would be that they'd have to own their property for 15 out of the last 20 years. So the original one had it 5 out of the prior 6 years. So we're now expanding it to 15 out of the 20 years. And we're raising the credit to $10,000 from $8,200 to account for the higher building values that we're seeing. Thank you.
Okay, so now we need to have public testimony and then we'll take a recess. Can you call public testimony?
Yes, Chair. The only person signed up to testify on this item is Tom Crowley.
Mr. Crowley.
Aloha, Chair. I'll have comments on each of the items today for you. But on this item specifically, what I thought I could bring to the table was when the council created this chart, if you will, for the building values, the rationale that was behind it, okay? The rationale that was behind setting a building value to determine whether or not you're eligible for a circuit breaker tax credit was that if someone could afford to build a really expensive property and therefore that drove their tax bill up, they really aren't the person we're trying to help with the credit. It's more the person who owns the land that their property is sitting on, and the land value goes up so much. I don't know what the effect would be of simply removing the building value thing. But what we're doing here is we're saying, okay, for people who've owned it for 15 years, we're gonna ignore the building value part of that. But I'd love to see, because it's simply a policy discussion for the council to have, to determine whether or not the building value needs to be in there. But the basic fundamental premise of that was we wanted to exclude someone who had the wherewithal to build a very expensive home on their lot and then say, well, now my property taxes are too high, and they created their own problem. But this bill seeks to address someone's property building value that has gone up simply because all other homes are selling for more. The other kind of slight problem with this bill is we kind of got rid of the difference between land value and building value a few years ago when we put them all together and said we're just going to have one value. So I'm not sure how accurate building values are. That's always an issue. For appeals, it's the total value of the property. But when we include this building value as part of this program, then the question is, did the assessor accurately assess the building value separately? So there's a number of issues that come into play with this, and maybe, just maybe, the council would consider getting rid of the building value criteria as part of the circuit breaker altogether, as opposed to creating all these different little, if you've owned it for 15 years, you get this, if you've, that kind of thing. So just something for you to think about, again, strictly as a policy measure. Thank you, Chair.
Thank you. Questions, members? Member Sugimura.
Yeah, thank you. So thank you for always participating, right? On page 2 of this bill, then you're saying delete the whole section, homeowners gross building assessed value. Delete that whole section? Is that what you're saying?
I'm saying that if you were to delete that section, then there wouldn't be a need for this bill altogether. We're putting this bill forward because there apparently are some folks who have owned their homes a long time and the building value has gone up, but we still want to include them into the circuit breaker. If you deleted this altogether, what's the risk? The risk is that there's somebody who has the wherewithal to build an expensive home and then say, now I've driven my own taxes up too high. So again, I'm not telling you what to do. I'm just saying this is a policy decision.
Thank you.
Yes.
Any more questions? If not, next testifier.
Chair, there's currently no other individuals signed up to testify on Bill 170, so we'll do a last call. If there is anyone else who would like to testify on this item, please identify yourself now. On Teams, you can do that by raising your hand. We'll do a countdown. 3, 2, 1. Chair, there's no one else to testify on this item.
Any objections to closing public testimony on this item and accepting written testimony?
No objections.
So ordered. All right. So to begin, we'll ask the members if you have any questions first to the Director of Finance. Yeah, and then recess. We have to start discussion. Any questions to the Director of Finance?
I do.
Member Sugimura.
So I wanted to know what the revenue impact of this bill is as proposed.
Do you need some time to look it up? Oh, okay.
At this time, the revenue impact is going to be very low. We only have about a little over 300 properties, I think, on Circuit Breaker. So it's not a huge revenue impact. We do have generational families that have owned their properties for many years that we're finding. The building value was added years ago to Circuit Breaker because new owners were building these huge properties and then going immediately onto circuit breaker. So there was a need for that building value to be added. And it's very important to have it. It does keep it, it allows for people not to build these huge homes and then immediately go on it. You have to own your building. You have to, by granting it, but making it harder, 15 out of the 20 years, there's not going to be a ton of people who would be able to go on it, but it would make a huge difference for those who are able to be on it as building values rise.
Okay, so you're saying to keep the assessed values, that chart in homeowners gross building assessed value section?
Yes.
Because of what you just
My
said?
recommendation would be to keep that
Okay.
in because
And-
we have had problems in the past
And
with
because of,
that.
oh, looks like Marcy Martin wants to say something.
I did want to point out that when we do our certification, we take the applicants and we come up with a circuit breaker estimate. So while we can't tell you what the revenue impact would be now, it would be deducted at the time of certification.
Right.
So if it did go up, we would hope it would go up, that some additional people would be able to qualify.
Okay, one more question. So based upon your example, would a taxpayer qualify for the Aina Kupuna and the circuit breaker?
So for that, they wouldn't need to apply. If they qualify for the Aina Kupuna, they wouldn't file for the circuit breaker as well because Aina Kupuna takes their property taxes to minimum taxes as is. So that would be that's the biggest savings is the Aina Kupuna.
Thank you.
Okay, and we will continue the discussion after our break, so we'll take a break until 10:30. Meeting in recess. Will the Special Committee on Real Property Tax Reform meeting please reconvene? It is now 10:42, and we are on item number 13, Bill 170, questions to the Finance Department. Member Sugimura, were you finished with your questions?
Yes, yes.
Member Johnson?
Thank you, Chair. If you'll allow me, I'll just do a quick intro, and then I might have an amendment here.
Oh, okay.
So basically, Bill 170 is creating a new circuit breaker category and in dealing with the spiking property values that we all see within our community. It aligns with the national discussion on affordability, which we hear a lot about how people are just being priced out. And I think it's an innovative way to lower housing costs on our people. I worked with Director Martin and the department. Ms. Stockwell has been great in working together on this bill. It's signed off by Corporation Counsel, but Corporation Counsel did bring up something important that I think I can defer to them on the reasoning, but basically, because we're extending the time this is available for some folks, that maybe some folks might sell their house and try to carry the circuit break over to a new property, which is a little fishy. We don't want that, but I'm going to turn it over to Corporation Counsel.
Corporation Counsel?
Yes, thank you. Yes, so the way that the bill is currently read, it would be the homeowner, I'm looking at, sorry, the new subsection B1, and it requires that the homeowner has been granted a home exemption for at least 15 out of the prior 20 tax years. So that's a condition upon the homeowner, but I believe Member Johnson's intent is that it would be for the same property. So I would recommend then just adding in some language such as the homeowner has been granted a home exemption on the same property for at least 15 of the prior 20 tax years. And then just for clarity and consistency, also amend the the current section A1 to also reflect the same thing. So if you look above on page 2, the homeowner has been granted a home exemption on the same property for at least 5 out of the prior 6 tax years. And that's just to provide clarity that the intention is that it's on the same property.
And Chair, if you'll allow, I'd like to have the department respond to Corporation Counsel's suggestion.
Sure, Finance.
Thank you for pointing that out. I think, I'm not sure the wording in my head, but rather than saying the same property, it's going to be the property that's being granted the credit. Yeah, so I have to think about the wording, but.
Yes, yeah, that would be fine, thank you. As long as it meets the intention that it's not just the condition is not just on the homeowner, because like Member Johnson said, then actually a homeowner could, sell their principal place of residence and buy a new principal place of residence and also receive the exemption. And then the credit would apply for different properties during that time period. So whatever language we need to make it very clear that it's for the same homeowner and property.
So I heard my time, and as when we get to the bill and when we get to the motions and the amendments, maybe we can do, let them do the language, but I would support that amendment. Thank you, Chair.
So I just have a quick question, Ms. Toshikyo. So this exemption will not be attributed to the homeowner, just the property?
It would be to both.
To both? Okay. Because you mentioned, talked about carrying over, the credit, the exemption. And the homeowner has been granted a home exemption for at least 15 out of the prior 20 tax years, but it could mean 2 different properties.
Yes, under the current verbiage.
Okay, all right. All right, do we have any more questions for Finance on this item, Bill 170? Are we ready to make a motion? Okay.
Okay. Chair, I move to pass Bill 170, 2025 on first reading.
Moved by Member Johnson, seconded by Member Sugimura to pass Bill 170 on first reading. Recommend passing Bill 170 on first reading. Discussion, Member Johnson.
Thank you, Chair. I'd also like to move to amend the language per our just previous discussion. If you'd like, I could leave it to the lawyers to actually have the language, but basically my suggestion would have been in section B, subsection 1, to be read as the homeowner has been granted a home exemption on the same property for at least 15 out of the prior 20 tax years. We can, I'm totally okay to have a friendly amendment to make it more legally sounding per both parties. So that's would be my amendment.
Member Sugimura?
Are you also going to include
Yes,
A1?
I forgot
Yeah,
that
yeah,
part,
yeah, yeah.
yes.
Okay.
And the same thing goes for the existing
Homeowner.
section 3.48.810 A
Oh, one. It's
1,
one now.
well, the new section being 1, the
A1.
homeowner has been granted a home exemption, insert new language, on the same property for at least 5 out of the prior 6 tax years. That would be my amendment for total.
Okay, second,
Thank you for that.
second.
Okay, any further discussion? Corp Counsel, could you give us something now and that you could refine later as far as wording?
So based on what Director Martin is suggesting, and I'll run this by her in open session, the homeowner has been granted a home exemption on the property receiving the credit for at least 15 out of the prior 20 tax years.
I see nodding heads over on administration side.
Okay. That's a friendly amendment. All right.
And yes, Chair, so the same would be for A1, the homeowner has been granted a home exemption
On the same property. Oh, sorry.
on the property receiving the tax credit for at least 5 out of the prior 6 tax years.
All right, any more discussion on the amendment? All those in favor of the motion, raise your hand, say aye. Is Member Rollins Fernandez on the line?
Chair, she's online, but we do not hear her.
Yeah, I know, but we give everybody a chance. So she's not responding.
Chair, yes, we still haven't
Okay,
heard any.
all right. Motion carries. Motion carries on the amendment. So the main motion as amended. Any more discussion? No? All those in favor, raise your hand, say aye. So 3 ayes, 0 noes, 1 excused, Member Rollins Fernandez. Motion carries.
All members.
Okay. All right, moving on. Staff?
Chair, the next item is RPTR 14 for Bill 171, extending Maui wildfires real property tax relief.
Okay.
May I?
Shall we take testimony first?
Chair, there's only one person signed up to testify on this item. That would be Tom Crowley on Teams.
Mr. Crowley?
Aloha, Chair. Jonathan Helton gave perfect testimony on this item. I'm in support of what you want to do, which is extend the tax relief. But the question that I'd like you to bat around there is, why are we only talking about the SMA and not the properties outside the SMA, number one? And number two, one question that I had is, why are we setting this up for 2 years and not just doing it 1 year at a time? I don't know what circumstances may change a year from now, but you certainly would have the opportunity to extend it next year to a second year if necessary. So that's, again, just a policy decision there. And then the idea that in the year that the person does rebuild their house, and as Mr. Helton pointed out, it might be at the end of the tax year, to then go and back tax them for the whole rest of the year doesn't seem right. So you would kind of fall out of the category in the following year because your home has been rebuilt. So you would not be able to get the tax relief once your home has been rebuilt. But this idea that we're going to back tax you during the year that you do rebuild your home for a period that you may not have had access to your home because it wasn't rebuilt does seem unfair. So I'd like to see you rectify that issue. And then the other question that I would have for this bill and kind of all the others that you want to bring up to the administration is, what's our deadline? Like in this case, is this an absolute deadline that we have to get done by December 31st in order for them to apply this to next year? Some of these things I think are going to have that deadline, and you really are going to have to take action today. I think you understand what's on the table there, and some of them maybe not. I hope that this committee will continue beyond this meeting and resolve some of these other issues that maybe we haven't really resolved at this point, and the deadline of December 31st is not necessarily all that important. You heard some testimony on items that are not on today's agenda from the first testifier that I really would like you to discuss in this committee at some point, but it's not on today's agenda, so there's nothing you can do. But I do think that we're making some good progress here with some of the issues that real property tax needs to address. Thank you, Chair, for the opportunity.
Thank you. Always good to hear from you. Questions, members, for the testifier? If not, may we have the next testifier?
Chair, there's currently no one else signed up to testify on Bill 171, so we'll do a last call. If there is anyone who'd like to testify on this item, please identify yourself now. On Teams, you can do that by using the raise hand function. We'll do a brief countdown. 3, 2, 1. Chair, there is no one else to testify on this item.
Members, any objections to closing public testimony on this item and accepting written testimony?
No objections.
So ordered. All right. So let's see on this. This one has so many. Okay, members, Bill 171, 2025 extends relief for certain properties impacted by the August 2023 Maui wildfires through June 30th, 28, under specific conditions, and identifies when exemptions are lost. And I'll ask Member Sugimura to explain it further if she wants to.
Chair, so as you recall, October 14th, the special committee discussed Bill 144, and based upon that, we have come up today with a new bill incorporating that which was discussed. So we worked with Finance and Corporation Council to introduce this new bill on extending Maui wildfire real property tax relief and taking into consideration the comments that were provided in the meeting. Bill 171 focuses on real property tax reliefs for property owners who have not yet been able to move forward with their rebuild. Targeted parcels would include those that are completely destroyed and remain vacant parcels that have not yet received final inspection approval, and parcels in the Lahaina burn zone where occupancy have been prevented due to the status of public infrastructure and utilities. Bill 171 also reduces the scope of the exemption to properties within the SMA area, including properties in the Lahaina Historic District or those that abut the shoreline. And I think by the testimony, we can discuss that further. The wildfires have placed a financial burden on impacted property owners, and by extending tax relief, this would provide support towards families and business owners. I transmitted a memo to the committee file that includes my communication with Director of Finance and her written comments. You may find that in Granicus number 2. Did it get uploaded?
Okay, and then we're at the point now before you
take testimony.
Yeah, we have to ask if the finance has any opening comments.
Okay, so yes, Finance has worked with Councilmember Sugimura thoroughly on this.
Can you speak louder, please?
Sorry. Real Property has worked with Councilmember Sugimura for data for this bill,
and real property is ready to assess properties that have been rebuilt and have infrastructure in place. I think within this bill, the historic district portion is something that we don't have the data for. So that is something real property cannot do at this time.
Any more comments?
I can make a comment as well. The additional section F carries a retroactivity that isn't necessarily applied to other parcels. And I'm not sure if it's really needed for the intent of the bill.
Why? Why?
Well, if the intent is to, so everyone is assessed as of January 1. So I think that if somebody completes, their home in June, we would, I guess, per this, it appears that the intent was to retroactively tax them as of January 1, but we wouldn't be doing that to other people who were building a house and finishing the house, because there's construction in other areas that aren't in the in the burn scar. So just to continue for uniformity purposes, just kind of stick to that January 1 assessment date would be my preference.
Okay. Is this similar to the other bill that I'm going to bring up that I've been talking with you about?
No, this is about,
I know you're talking about Lahaina, but still, I'm talking, well, we'll get to that. Never mind, we'll get to that one. Okay, so we had our opening comments and our explanation. Do we need to take testimony again? No, okay. Let's have further discussion from the maker of, the introducer of this.
Thank you. So I heard the comment about that well, first of all, I agree to what the department said about taking out the historic district, because if I gather what they were saying for real property tax, they don't have it segregated like that. So if we took out the reference in section E, then we would then be able to help for clarity. So 3.48.230 and taking out that section E, from section E, the word a historic district from that. But I wonder if the department would comment on that prorated taxation amount based upon the comments from the testifier, and it would be for that section F.
Finance?
So you're saying to just leave it the way it is?
Typically with exemptions, if we find, fraud, we would recalculate for the entire year. We would remove the exemption and recalculate. But this is just triggered upon, it appears if they finish their building during the assessment year, so they could have been compliant on January 1 for the exemption. And we just, like I said, appraisals are as of a specific date. So, and if we did find something that we missed, we can do an omitted assessment under other sections of the code.
Okay, so you're saying to leave this, don't make any changes. And then what about the comment about the deadline? So,
So
Instead of 2
keeping
years.
it for 2 years from June 30th, July 1st, 26 through June 30th, 2028. I do think that we as a division can, the 2 years is a good amount of time. The 1 year comes really quick, and 2 years, I do think that that is a good time to administer this program and to make sure that we have time to, as properties go out of this, then we'll be able to just take it out as they get built and everything. Then they would get out of this and be taxed at 100% market value at that point. So, the 2 years works for
the
real
2 years.
property.
Okay, so the 2 years is good, so we won't change that. Okay, thank you.
Member Johnson, did you have questions?
Sure, thank you, Chair. So my understanding is we're looking to strike section F, but what about all the subsections underneath that? I would assume you would want those removed as well? I think it's 1 to 7.
Correct, the whole section F could be stricken out.
Okay. That was my only question, is to make sure that we're gonna do more than just the F, we're gonna take out the 1 to 7s. You had something more to add, Director?
Go ahead.
Yes, so, and Carrie had mentioned, under section E, so it
The
reads
mention
in
of,
part, wildfires in its reentry map of impacted areas and is located within the historic district. So that would need to be removed.
okay,
And, for simplicity purposes and to make it easily administered and to create parity, maybe the words, and this would be a policy decision, I'm
sure.
just making a menu item of things. All of that qualifying language could be removed and just make it parallel to what it was last year, with the exception of if you finish your building and you're able to occupy it, you're not exempt. So you would take out "and is located within a historic district, comma, special management area or abuts the shoreline." So the new wording would be wildfires in its reentry map of impacted areas is exempt from property taxes.
Period? Oh, full stop? I'm sorry. Okay. All right, okay. So, Corporation Counsel, do you understand that? I'd like to hear your opinions on what their recommended language changes are. Looks like they're thinking.
That's my thinking face. Okay, so I just wanted to, it's going to be similar to subsection D that had extended the relief to 2026. I'm sorry, Marcy, what did you say again about the areas? Is it just for wildfires in the reentry map of impacted areas? But we're only talking now about the SMA, which I believe does encompass the historic districts in Lahaina. And those properties that abut the shoreline. So is that part correct?
Yes, so
Yeah.
we'll use Lahaina Luna for an example. So if you had a vacant, if that's your criteria, a vacant lot up there would be taxable versus a vacant lot in the SMA. So staff would have to, do extra work to segregate out and search which properties, where if it just was all properties within that reentry zone, it would be easier to administer.
Okay. And then we're leaving the subsections 1, 2, and 3, and deleting the entirety of the new section F. which I believe was a way to kind of narrow down the exemption further as properties are completed. I'm sorry, the improvements are completed.
Well, F reads that the taxes would be recalculated without the exemption if we found one of those. And so that wouldn't be a qualifying, that would be a retroactive action.
Oh, okay, so are we deleting the entirety of F or just the phrase "and the taxes for the entire year will be recalculated without the exemption"?
I think it all goes together.
Section F as well as the subsections 1 to 7 is what they're considering. I mean, I understand administratively is what you're trying to do is make it a little bit easier. I think if Corporation Counsel, if you think that's legal for them to do, I have no problem with it. Maybe the writer of the bill, do you have any issues with that? I mean, we want to make it work for everyone.
Plus, I have more to say.
Okay. Sorry, Chair, I was chairing your meeting just for a minute.
Oh, go ahead. Please continue.
I have
Okay, yes, Member Sugimura.
Yeah, so also, I mean, I agree with that, so delete that section F. So also, when we talk about the area located in the Lahaina re-entry zone, I believe that what I heard also the testifier say is to not exclude areas like the Malka of the highway, yeah, so to have it as a broader scope department.
Correct. I think that's what the testifiers
Yeah,
were
so
speaking about. And for us,
fine?
that would, administratively, it would make it
It would make it-
easier
okay.
for us to include everyone rather
been
than
impacted.
having to go through everyone and look for the SMA, which we can do, but administratively, it would be easier just
Okay.
to have everyone who's in that just completely destroyed, which we have already documented.
Yeah, that's where you started off, right?
Correct. We have that all,
so
100, all documented.
So Corp Counsel, can you help with the the language here so that we can make it all encompassing and not only with the SMA?
Thank you. So I think to achieve that, I think there's a couple of ways you could do it. So one way would be to keep the new subsection E, but delete the language that starts after the second comma and is located within a historic district, special management area, or abuts the shoreline.
Okay, so delete that part.
Yes.
Okay.
And then the taxes would be from July 1st, 2026, well, the exemption, July 1st, 2026 through June 30th, 2028.
Okay, okay.
And then leave the, if the real property is not occupied, and you've got the 3. The other option, I'll throw this out there, is to amend subsection D and just extend it from, no, maybe that won't work, sorry. Yeah, I guess that would be my suggestion if you're gonna leave in E. So it would really look like D, the old D that has been passed previously, except that, again, you're extending it for 2 years and then putting more qualifying language on the parcels.
Okay, so if I understand you correctly, then you're saying, well, D remains, but for E, you're suggesting the change of language to encompass greater proximity of these properties that have been impacted, right?
Right.
Okay.
So
It's
it
gonna
would
be-
include all of the properties that were in D, which were in the red or yellow reentry zones as of January 1st, 2024.
Right, and so E would be real property that was located in a Lahaina re-entry zone as established by the county following the August 23rd Maui wildfires in its re-entry map of impacted areas, is exempt from real property taxes, including the minimum real property tax for the period July 1, 26 through June 30th, 28, if the real property is not occupied and blah, blah, blah. That's correct. Okay. That's my motion. At the appropriate time.
It's coming up. Member
Okay.
Johnson?
I would second that motion. I have no further discussion.
Okay. So that's your motion?
Yeah.
Moved and seconded by,
Oh, sorry, Chair. I was also going to say, if she's also going to delete section F.
F, yeah.
It should also be included in the motion.
Delete section F.
okay, can you repeat your motion then, please?
Chair,
Yes?
Gotta do
apologies.
the main motion, yeah. I move to accept Bill number 171, 2025, a bill for amending Chapter 3.48 Maui County Code, extending Maui wildfire property tax relief.
Second.
Okay. It's been moved by Member Sugimura, seconded by Member Johnson, to recommend passage of Bill 171, 2025, extending Maui wildfires real property tax relief. Okay, are you going to make an amendment?
Yes, so
Okay.
and the amendment.
So no discussion on that?
No discussion.
No discussion.
You're going to make an amendment. Go
We
ahead.
need the amendment. You want us to say it all over?
Yes.
Okay, so the amendment to this is, I amend Section E, real property tax that was located in a Lahaina reentry zone as established by the county following the August 23rd Maui wildfire in its reentry map of impacted areas, deleting and it's located within historic districts, special management area, or abuts the shoreline, and continues on with the rest of that sentence, which is exempt from real property taxes, including the minimum real property tax for the period July 1, 26 through June 30th, 28, if the real property is not occupied, and then also to delete section F, as
F-
discussed.
F as in
F as in
Frank.
Frank, yeah.
Okay. So just to repeat, in section E, you are deleting and is located within a historic district, special management area, or abuts the shoreline.
Correct.
Or abuts the shoreline, okay.
And delete F.
And then delete F. Any discussion on that?
No.
Member
I'll just
Johnson?
add that when we delete section F, it's also does 1 to 7 as well.
Okay. All right. No more discussion? All those in favor of the amendment?
Chair, so just to clarify, Councilmember Johnson was the second on that amendment?
Yes, I was
That's
the
what I
second.
understand, yeah. All those in favor of the amendment, raise your hand, say aye.
Aye.
Okay, 3 ayes, 0 noes, 2 excused, motion carries.
Main motion.
Yeah, main motion as amendment, as amended. I just realized that I've been saying 1 excuse, but it's actually member, no, it's just one. One has, I don't know why I thought of her as being a member all of a sudden. Okay.
I know, I missed it.
1 excused.
Yeah.
All right. So the main motion as amended, any more discussion? If not, all those in favor of the motion, raise your hand, say aye.
Aye.
3 ayes, 1 excused, Member Rollins Fernandez, motion carries.
Thank you, members.
Now, we actually are on 2 items that were proposed by Member Rollins Fernandez. And is she on the line? Twenty more minutes. Are either of these controversial? Members, do you have any questions or comments about this in advance? It's what? It's not signed. Oh, okay. Yes.
Apologies, but before proceeding with further discussion on those bills, would you like to take testimony on them?
Not yet, because we're deciding whether or not to call them up or not. I didn't want to, but let's take out of order Bill 146. Any objections, members? Because that's mine. So I'm the only one present. I was going to defer that one, but we may as well take it up and we can talk about it. Okay, so let's call that up for testimony.
Yes, Chair. So proceeding with testimony on Bill 146, there's 1 person signed up to testify. That would be Tom Crowley.
Mr. Crowley.
Hello, committee. Tom Crowley. Just before I jump into 146, I just want to point out that in removing section F of the last bill, what that appears to me to do is it will grant this 2-year exemption for people who do rebuild in the following year. So if someone rebuilds their home in 2026, they will continue to get this exemption through the end of 2027 because you remove that criteria there about the has received a building permit. So I want you to consider that as part of the idea that you removed everything from section F there. But that's not what my testimony about, because my testimony right now is on Bill 146. This bill, as for the bill that you just skipped over, does attempt to expand the opportunity to address incorrect tax classifications for newly acquired properties. What is most important here is understanding how the tax department will administrate this exactly. We all know and we agree that when a property use changes hands, when the new owner comes in and maybe they're a homeowner, or the new owner comes in and they're not a homeowner, we now have up to an 18-month delay in correcting that. This attempts to address that, I think, for just the homeowner side of things, but this is a broader issue that needs more attention than just this bill brings to it. There are a number of use changes that can take place within a given year. For example, if someone has a permit to make a use and then they give up that permit, they continue to be taxed at that higher rate for that as if they had the permit until the following tax years. So again, that can be up to 18 months in delay. So there are a number of things that this bill doesn't address in the broader aspect of trying to match the right classification with the use that is being made at within the tax year. But I do support all of the efforts, Bill 146 as well as Bill 142, in trying to rectify the greater problem, which is incorrect tax classification for up to 18 months on these properties. So again, I don't think either of these bills address it completely, and I hope that it will remain in this committee so that we can come up with a more comprehensive way to address all of these things. But the real question here is for the department. How will you be able to administrate this effectively when ideally, as soon as the new owner takes over a property, you would like the classification to change then at that moment and the taxes be recalculated from that point forward. But that might not be something they can administrate. So I'm all ears to hear from the department as to how they will administrate any of these choices to fix what is a problem. Thank you.
Questions? Member Johnson?
Thank you, Chair. Clarifying question on, you said you'd support other ways to make this work, because I understand that the 18 months kills some folks. Would you support a special fund that would pay the difference until they caught up to the actual rate?
Yeah, exactly. Administratively, you got to deal with it one way or the other. From a budget balancing standpoint, one of the things that I look at is when you guys get your final numbers, the appeals are considered in there, 50% of the tax of the what's appealed. And then you end up getting more money from that as those appeals in many cases are not granted. So you already have kind of a fund that builds up in the appeal side, and maybe that couldn't be used, that fund can be used to offset this. Again, it's really just how do you want to administrate it internally, and that's a question for the administration, not for me.
Thank you, Mr. Crowley. Thank you, Chair.
Yeah.
Thank you. Any more questions? If not, thank you. Mr. Crowley, any more testifiers?
Chair, there's currently no one else signed up to testify on this item, so we'll do a last call. If there is anyone else who'd like to testify on Bill 146, please identify yourself now. On Teams, you can do that by raising your hand. We'll do a countdown. 3, 2, 1. Chair, there is no one else to testify on this item.
Members, any objections to closing public testimony on Bill 146 and accepting written testimony? So ordered. All right, this bill, I realize is not the perfect bill, but what I was trying to do was two things. One, let's say if you buy an STR, if you buy an STR, presumably prices have dropped to affordable levels, and I'm a workforce housing person and I need a house and I want to buy one of these STRs. The problem with that is I probably qualify to buy that house or that unit with what I have. In other words, I don't have another spare $10,000, $15,000, $20,000 to pay for taxes. And that would probably serve to disqualify me from a loan to buy the STR unit. So I was trying to think of a way, probably you too, Mr. Johnson, to help this person not be responsible to carry that liability. So because when you apply for a home, let's say for $300,000, and you qualify, it's usually because you just make it. You just make that qualification. You probably are not in any position to find another $10,000 or $20,000 to pay the rent from STR, the STR tax classification, because now you are owner occupant, which is way less, like $2 per thousand versus $15 per thousand. So I was trying to figure out how we could help that person. Similarly, somebody, I know there are a lot of affordable housing projects in general in Maui County, and those who apply for these properties are just at the 80% or just at the 90% or just at the 100%. So they have, in other words, they barely qualify for, but they do qualify for these projects until they find out what the taxes are, okay? Because it makes a difference if you move into your house in January or if you move into your house in November. And a lot of these people who are hoping to get this house, who barely qualify, cannot qualify anymore after they find out their tax liability and they're not going to get the loan from the banks. So how do we help these people? Right now, there is a proposal which gives them two different deadlines, December 31st and then June 30th. But still, you have to pay for half a year at least in some cases. So Member Johnson talked about having a fund to pay for the difference that people have to pay between owner-occupant and something else, whatever was the, well, what happens now, for your information, if you're a brand new occupant, you're gonna be an owner-occupant, but you didn't meet the deadline because you didn't get your permit from the county until January, so you get to move in January. But what you're classified as is a non-owner occupant automatically. Why? I don't know. Because you are an owner occupant. You're not a non-owner occupant. Maybe it's as simple as changing that classification sooner. I don't know, but up until now, we haven't been able to come to a satisfactory resolution on this. And maybe this is a good time, since Member Rollins Fernandez cannot take on her proposals. We have some extra time to talk about this one, which does not have to be resolved today, but maybe we can come up with some ideas that we haven't yet thought about. So can I just go into asking them for finance? Can you give your presentation on this?
Thank you, Chair. So real property taxes, which support local governments across the country, are based on appraisals, which are as of a date. So for Maui County, it's as of January 1. It's how the property existed and how it is occupied as of January 1. And that January 1 is used for the period between the following July 1 and then to the end of the year at June 30th. So the classifications aren't correct. They're always correct as of January 1. And, the reasons for that are the predictability and, for credit ratings and budgeting and all of that. But it does create a gap and a lag in tax relief. Typically tax relief is given retroactively, right? You're in for a year, then you get it, then it credits back. That's the way the circuit breaker, that's the way all of our programs work now. But as this owner-occupied rate has gotten lower and the non-owner occupied and TVR rates have gotten higher, it is affecting affordability. So we are in support of Bill 146 to address a certain portion of this problem. And Carrie has some language modifications that she would like to suggest. When you're talking about affordable homes, that's different, and that could be addressed differently based upon maybe once a property is has a deed restriction to make it affordable or workforce. Maybe at that time is the time that you give it the tax benefit, right? And then that would carry on to the new buyers. There's different ways of addressing the different issues. Bill 146 will be administratively difficult because it's going to require a mid-year adjustment. It's going to require taking applications, an additional 6 months. So it's going to double up applications. It's going to require adjusting the tax base. And we know that from the Big Island because they have read this program, and we know it's a very labor-intensive program, but we understand the need for it. So we've come up with language that we feel we could make this work.
Why don't you share it with us?
So Real Property has worked extensively at looking at different programs and different ways to administer this. And we've gone back and forth and did whole different ordinances, but I think what we came up, the one that we can administer is would be a half year, would be that you can apply for the credit either at December 31st or June 30th. So if you apply on December 31st, you get the credit for the following August payment. If you apply by the June 30th, you'd get to see the credit as early as the February 20th billing. So basically, in 3.48.410, it would say none of the exemptions from taxation granted in sections 3.48.466, 3.48.475 through 3.48.350, et cetera. A claim for exemption on a form prescribed by the department. Then we'd add a sentence that says the exemption from taxation granted in sections 3.48.450 through 3.48.460 must be allowed provided that the claimant has filed a claim for the home exemption on or before December 31st for the first half payment or June 30th for the second half payment on such a form as shall be prescribed by the department. And then in 3.48.450, B3, we'd have to add, it would say that where the taxpayer has acquired a home by a deed made on or after July 1st, 1951, the deed must have been recorded immediately preceding the year for which the exemption is claimed. That the that where the taxpayer has acquired a home by a deed made on or after July 1st, 1951, the deed must have been recorded by the respective date set forth in 3.48.410A. Thank you.
You're asking for a copy? Yep. Okay, also, that could, I would say, apply more to the STR situation. You know, going back to the other circumstance where you have a new subdivision, workforce subdivision, and people are not allowed to occupy until after December 31st. So let's talk about that one for a second, okay? What if, from the very beginning, upon permits issued that for this workforce housing project, which is deed restricted, well, I take that back. Let's not use deed restricted, which is restricted by incomes, okay? So, in other words, those units that are identified as affordable units, and we know it's all going to be owner occupied, they could file that information with the finance department so that effectively is their date that notifies you of a request for exemption, home exemption, something like that. Now, wouldn't that also be something you could consider to incorporate in your process rather than after the fact, when there's so many different things that could go wrong that's beyond the control of the home buyer? Like, for instance, they didn't get their final inspections, or there's something that the county is, or the state is holding back on, so they have no control whatsoever on their occupancy date. But what is for sure is when the council passes this project as affordable, and it's going to be owner occupants within an affordable range, then the time they move in should be irrelevant because they already are considered affordable owner occupants. Marcy.
Thank you, Chair. So currently, there is a program. It's under 3.48.366, and that is for land dedicated for fast-tracked housing. But of course, not all of our workforce housing is dedicated under under the fast-tracked housing. So I would think that maybe mirroring sorry, copying a program like that would benefit in two ways. It could be an incentive for the developer, right? Help them save money during construction, and then it would also benefit the new buyers because it would already be, so they would come in exempt, and then the taxes would go up a little bit as they bought for their workforce. And that's going to be similar to, say, we just heard about the land trust, right? So when the land trust owns it, it's exempt and they're paying the minimum tax because they're a nonprofit. And then when the owner comes in, they're going to benefit from that lower tax for the portion of the year that the land trust had the exemption. So it would create kind of that type of situation. So it would be more preemptive than after the fact.
Okay, let me ask a real quick question. The developers now pay taxes on the units that are not occupied?
Yes, they pay taxes on the land and the partially complete buildings as of January 1.
Oh, I mean, the units don't have to be completed, they have to pay taxes. On how do you determine what the units are worth when they're not finished?
Thank you, Chair. That's very difficult, but we use a percent of completion. Our
Okay.
system allows us to do that.
Member Sugimura, then Member Johnson.
So are you trying to create a bill thinking about Bill 9? Is that what you're trying to do?
Well, two things. Let's say if Bill 9 passes, yeah? And I feel sorry for the people who want to take advantage of the lower values in condos or other types of units and find out, although they can qualify to buy it, I'm not sure if they can qualify to pay the tax liability on it. It's depending on what time of the year they buy it, of course, but let's say they buy it in February. But anyway, the point is you pay taxes for the previous year. So the thing is, they're going to have to pay very high taxes. It's $15.75, I think it is, per 1,000 for short-term rentals, and it's $2 for owner occupants. So it's a big liability, and in some cases, they won't be able to qualify.
Okay, so.
That's the STR side.
Okay, so in general then, I think that we cannot create an exemption, thinking of a bill that hasn't passed yet, but real property tax, is this fair for everybody? I mean, you would be able to do this. We're not doing this for Bill 9 that hasn't passed yet, but I can see the thought process. But what is your comment on this?
Carrie?
Yeah, just thinking it, all real property's whole goal is to be uniform and, to administer a program uniformly. Currently, just picking like one, I don't know if that would be a uniform process if we're looking at just short-term rentals. Then you'd have to look at non-owner occupied, commercial, residential, and kind of broaden the scope at that point because that is one of our main objectives is to be uniform and equitable to all parcels.
For going back to what Director said when you referenced 3.48.366 fast track housing, can you explain that again as it ties to this? And is there something that we can make it applicable to that so that it's fair for everything?
Okay, I want to clarify that the 3.66 doesn't,
Let me clarify that, please. Okay, I was talking about two different circumstances. I was talking about one, STR, yeah, and two, a developer of affordable housing, which is separate from STRs. And the developer oftentimes cannot guarantee exactly when the people are going to move in. And sometimes when they move in, it's in January or February or March, so they have to pick up the whole tab from the previous year. But I'm wondering, why can't, why do they have to be charged non-owner occupied, instead of owner occupied? That's one. The other thing is, why do they have to pay for occupancy when they didn't occupy the unit, So those are the kinds of things. They're similar, but they're not the same. One, probably we could think of some kind of variation to the land dedicated bill. 348.66, maybe we can look at something like that, land dedication and how projects that have been passed by the county council and designated affordable, they all have to meet all the requirements of, let's say, 296 or some of the other requirements. So why these people who are already assigned to an unaffordable unit, why would they be classified as non-owner occupied? That's my question. So anyway, at least this is improvement, you know, because we've been talking about this for months. And this is the first time thank you for thinking of this, the land dedicated possibility. Maybe we can't do it, but at least it's something that we can try, you know. And then Carrie, you're going to add to this?
No, I don't have anything more to
No,
add at the moment.
okay, Member Johnson.
Thank you, Chair. Well, right off the bat, I don't really support going down this route. The example that you gave is something that I too am concerned about. Folks who buy a house that's labeled, or buy a condo that's, or any unit that's labeled short-term rental, and then they're on the hook for that, that's gonna push people out of that option. And that's a problem when we have a housing crisis, right? So one of my suggestions was they have a fund that they could dip into to cover that cost while people actually get taxed at what the use is, which is an owner occupied. That would make sense to me. So when we have this discussion today, and you mentioned you wanted to defer it, I don't really want to go down this route. It doesn't seem, it's only doing half at best, right? And half at best in good times maybe can, but half at best in these times, I don't think that's good enough. And that's just how I feel on this. So that's my 2 cents. Thank you, Chair.
Don't want to go down this route without keeping the option of a special fund alive? Is that what you're saying?
What I meant is in the way this bill is written, it only going to give you maybe half of the time that you could be taxed at a better rate. So how about in the spirit of compromise, there is a fund that covers the other half when they're taxed at that high rate. And I'd like to hear what the department would have a saying on that, because I know the idea of the fund might be administratively burdensome, but think of our people, when they see that tax bill, it's gonna knock them out. They're not gonna buy it. We'll be back at square one for those folks. So if you had it where half of the year you had to pay a very high rate and that was covered under a special fund until it kicks in at the rate that they're actually living in, that seems something like a compromise to me. Department, would you?
Finance?
Thank you. And we did have the experience of working with Councilmember Gabe Johnson and trying to problem solve regarding the fund. And it seemed very difficult, and I took our work back to the administration so we could have more minds problem solving this issue. And another idea that came up, and might be to have a program kind of similar to what you do for affordable housing, where there's a grant. It's not a fund, it would be a grant that they would apply for, and then they could credit in the property taxes. And then I think you would, I guess you're always trading one for another, but at least you'd be alleviate some of those legal and software type issues that we would have. So that would be, to me, another idea that maybe would be easier to implement.
So I know the way the Affordable Housing Fund is written is that this money can be used if affordable housing is produced from it. Is that something you think, and maybe Corporation Council can speak on the uses of the Affordable Housing Fund, maybe that we could pull from that pot to cover the taxes, which is, I don't know, I'd like to hear from them, but it sounds, they're nodding their head. Go ahead.
Thank you, Chair, and thank you, Member Johnson. So I just wanted to make sure that we're all talking about the same thing. So, I mean, we have Chair Lee's bill, and the department has made some recommended language changes that would basically encompass all applicants for, I guess the big one we're looking at is for the homeowner's exemption. And so I just want to make sure that I'm talking about the correct topic right now, which would be what the department is recommending. That would be difficult for the use of the affordable housing funds because, again, it's a restricted use fund, and not all applicants under this new provision or revision would qualify, because we're also talking about people who are just, over income, who may be wealthy and not necessarily qualify for the use of the affordable housing fund. So that's my thought. I mean, basically what they are suggesting is just opening it up to all people who are applying for the homeowners exemption. And I think you might be talking about more those that are going to be more income qualified, or the residential workforce housing
Right.
type.
I was just trying to find a way that if they're concerned about creating a fund, which might be an administrative burden, but then we get into the grant, and I'm curious what the administration would suggest. I go and get one of these units, I pay up front, and then I write a grant and get reimbursed. Is that how you would envision it?
Ms. Martin?
Thank you. Yes, I wasn't saying we could use the Affordable Housing Fund for
No, that
this
was me
program.
thinking.
Yeah, it would have to be, something else. But for example, in Lahaina rebuilding right now, for example, if you needed something, you might be able to apply for a grant, and then that grant would cover that expense. So there was these grants that you could apply for that would lower certain costs. So to me, that would be a model that and I said, like the down payment assist program, right? Where someone is looking for a home, right? They kind of apply for the relief, right? And they have that in the bucket, right? So then when they go to escrow, that's part of what they have to contribute to their closing and moving forward, which would be to maybe pay down the taxes. And then that would partner with Alice's bill, which would be the moving forward piece.
Could you imagine them getting the grant quickly? I know this has been kind of a hot topic, in case you guys haven't been here. I've been getting emails, and maybe the council members, but it's been slow to get reimbursement from the county, and that could be a problem when you're just trying to get in a home, paying all those bills, and then you got to come up with the upfront costs, and then you don't get reimbursed for a year or something really way long. These are, working class folks that don't have that kind of time that, that's a concern I would have.
Well, then you're right, we are busy. So maybe it would be similar to some of the wildfire grants, and it would be administered by a private party.
Doing it this way, you know how houses go real fast? If there's a good deal on a unit, it'll go quick. If they have to then go and apply, all of a sudden they get pushed out by someone who's got cash, right? And that's a concern I would have too, so.
I think with the down payment assistance program, I think you qualify first and then you shop. But, I don't know, we're just problem solving.
I know, right. Again, I'm sorry, I don't really support the way it's proposed now, but again, the problem solving is good to have this discussion at this time, because a simple fund where you guys could pull out and kind of, the county paying itself it seems to me the fastest. If we're making processes that are too hard for our own selves, then maybe imagine how it is for John or Susie Q. Public, right?
Okay. And it's apparent that we're not going to solve this today. Any objections to deferring the 146 and the other one, 142? Okay,
Just, I want to say thank you for, it's a good discussion. I don't look at it as a loss. Thank you for the deferring. Thank you, Chair.
Chair,
yes.
apologies. Staff's understanding is the item on the floor was just Bill 146. Perhaps before deferring Bill 142, you might want to just briefly take
Okay,
testimony
let's
on it.
take testimony, so we can defer that too.
So Chair, proceeding with testimony for Bill 142, there isn't anyone on the list right now, but perhaps Tom Crowley might want to testify on that.
Thank you. Tom Crowley always has something to say, right? Bill 142 goes right along with the discussion that you're having right now. And again, I think you really need to work with the department to come up with a way that they can administrate something like this. They kind of like halfway bought into the idea of the 6-month thing, okay? And if that's the best you can do, that's the best you can do. But I would hope that we could do better than that and change tax classifications more than once every 6 months, because it means you're at least out of sync for 6 months. And then there's the issue that I know Councilmember Lee and Johnson are trying to solve, which is the guy who's trying to apply for a loan, when the underwriter looks at the taxes, they simply look at what's in the record right now. So we really would need something that tells them this tax is going to be less upon the person taking ownership of the house. And that's a more difficult problem to solve. You're going to need some people from the loan industry to try to explain to you how that happens. But it absolutely is true that if there's an STR tax on a particular property and that's $15,000 and there's somebody's trying to buy it and they're going to live in it and it's only going to be $1,000 when they buy it, they're going to get knocked right out of the ballpark with that extra $14,000 of tax that the underwriter is going to carry in there. So that's a problem you want to solve in some way that the underwriters would buy off on. And the idea that you were just discussing of creating a fund that would give them back the money, that doesn't solve the problem. They're still not going to qualify for the loan, So yeah, it's a big problem. You really need some cooperation on the part of the department to say what they can administrate and how they can make it work. So I'm here to help however I can, but I don't have the answer for you just yet. Thanks.
Thank you. Okay, any more testimony?
Chair, there's currently no one else signed up to testify on this item, so we'll do a brief last call. If there's anyone else who would like to testify on this item, please identify yourself now. On Teams, you can do that by raising your hand. We'll do a countdown. 3, 2, 1. Chair, there's no one else to testify on this item.
Any objections to closing public testimony on Bill 142 and accepting written testimony? No objections, so ordered. Members, would like to ask you if you have any objections to deferring Bills 142 and 146.
No objections,
So
Chair.
ordered. Okay, the reason why I'm kind of rushing this is because we now have Member Rollins Fernandez back online, and she has 2 items, and I'm not sure if we can, it's quite possible we could take them up very quickly. Is she on? Is she back on?
Are we breaking for lunch at 12, or do we plan to stay a little longer for this?
If she can take these quickly and there are no, complications, then these will be the last 2 and then we'll take lunch. I mean, not lunch, but adjourn.
Okay.
Where is she?
So, Chair, apologies. I believe Councilmember Rollins Fernandez was online, but I think she encountered technical difficulties.
Where is she? On Molokai? In Honolulu, okay. Is there any particular rush for these 2? Okay. All right, let's call for public testimony.
Chair, proceeding with public testimony on just Bill 169.
How about taking 2? Can we take 2?
For both items, So for both Bill 169, 2025 and Bill 168, 2025, proceeding with public testimony, we'll first call on Tom Crowley.
Hi, Tom.
Hello, Hi, Chair. I'm disappointed that we're not going to get to Bill 169 because this is the one that I was most in support of. So I'm fully in support. And Autumn gave you good testimony about why this bill makes sense. That these properties that are held in a
Tom,
community land trust.
we are planning to take up 169 and 168.
After lunch?
No, after you testify.
Oh, after I testify. Okay, great. Oh, sorry. Oh, sorry. Someone was calling me. Okay, well, I'm in full support of Bill 169. It would help. Oh, darn. I'm sorry. People keep calling me and it keeps interrupting me. This makes a lot of sense for these properties that are in community land trust, as Autumn Ness pointed out. The owner of the property does not own the full equity of the property, and the community land trust owns the land in general. And in general, these nonprofits are not taxed on the land. So it makes a lot of sense the way that this has been proposed. Again, the devil's in the details and how it would be administrated by the department. But I'm in full support of the intent of Bill 169. And if the administration says they can administrate this, then please pass it out of committee today. Thanks.
And do you have any testimony on Bill 168?
168 seems to be a defective bill. As I read through it, it does not seem to comport. Maybe I don't fully understand it, and maybe Councilmember Rollins-Fernandez can explain it. But what it appears to do is it appears to remove the $100,000 tax exemption for owner-occupied properties that also have a long-term rental. And then it appears to say that if the property is valued at less than $500,000, you get it fully exempt. But if it's valued at more than $500,000, then you only get a $100,000 exemption. There seems to be something wrong with the bill. I understand what they're trying to do with this bill, which is let's give an even more generous tax incentive to someone who's going to rent at less than 70% of the area average rental or median rental price. Again, the devil's in the details here too. Even if you fix what's wrong with the bill and put the right exemption amounts, I don't know how you administrate it. I mean, asking the department to monitor the rental amounts that people are renting for, I think is going to be very difficult for the real property tax department to do. So I understand what they're trying to do. I think it's a good idea, but I think this bill as proposed is defective and incomplete. Thanks.
Thank you. Questions, members, for the testifier? If not, thank you very much. Do we have anybody else?
Chair, there's currently no one else signed up to testify on either Bills 168 or 169, so we'll do a last call. If there is anyone else online or in the chambers who'd like to testify on either of these items, please identify yourself now. On Teams, you can do that by raising your hand. We'll do a countdown. 3, 2, 1. Chair, there's no one else to testify on either of these items.
Members, any objections to closing public testimony on Bills 168 and 169? No objections. Okay, so ordered. Let's get started on this. I see Member Rollins-Fernandez. Member Rollins-Fernandez, welcome. Can you speak to the group regarding 168 and 169?
Hello, Chair. Oh, hello, Chair. I am on Oahu, in a public place. Okay. You want me to provide comment on both bills right now?
Well, do you, since we're up against, past 12 now, it's quite possible that 169 is not an issue, but 168 may have some issues. Are you wanting for us to consider passing both today out of committee?
Yeah, that was my intention.
Okay, why don't you give us a rundown on both?
Okay. Mahalo, Chair. So, members, Bill 168 intends to provide two it's an add-on to our current long-term rental classification and exemption. It would provide more of an exemption for properties that rent at 70% of fair market value as set by HUD. Fair market value as set by HUD is at 100% is pretty out of reach for a lot of our family members, for our residents in Maui Ponte. Sorry, I don't have the chart right now to share. I'm on my phone. But basically, the long-term rental classification would continue as we set it during budget session every year. And the exemption would be, as I proposed, $300,000 exemption for the property if it's just a long-term rental, and $500,000 if it's rented at 70% of fair market value. And we can discuss those exemption amounts at the rate that it is. Oh shoot, I looked up the wrong rate, I just realized. But basically, tier 1 rate, if it's $2 per 100,000, then it would be $200 per $100,000 exemption off of the property, the assessed value of the property. For 169, this is a codification of a practice that the Real Property Tax Division already does in assessing a property at the original value at time of purchase or move-in. For deed restrictions, or for properties that have deed restrictions on price restrictions. So and so if the deed restriction is enforced by the county or the government, then we already have a process for holding the value at that original amount. But for properties that are, the deed restrictions aren't enforced by the county government and is rather enforced by a nonprofit, that's why this Bill 169 is proposed. So that practice that's already done for deed restrictions on the value of the property, for county enforced deed restrictions, and also apply to nonprofits with the that's enforcing those deed restrictions. Okay, mahalo, Chair.
Thank you. Okay, so finance response on, is it correct to say that 169 is merely codifying a current practice of real property anyway? So that we don't get into any long discussions and you can.
Thanks, Chair. The Real Property Assessment Division and the director has worked with Chair Rollins extensively on this ordinance and this bill, and it's just to make it parity with the other workforce housing that we have.
Okay, so it seems to be something that's already being done. So what about Bill 168?
Thank you, Chair. So we've reviewed 168, and so just to clarify, is this only intended for those properties that are owner occupied and not for just long-term rentals would be a question.
Member Rollins Fernandez, did you hear the question?
Yeah, mahalo, Director Martin. So this is for long-term rentals. For the long-term rental classification, the long-term rental program. So currently, like we talked about, if anyone does long-term rental, then they qualify if they apply, I believe. But there's no mechanism to enable or to incentivize that cost savings that we're providing to the tenants. And so by creating this mechanism, it provides more of an incentive for a landowner or landlord to rent to tenants at an affordable rate.
Finance?
I think this would be a question then for Corporation Counsel. Would the bill would language need to be added to 3.48.466A?
Corp Counsel?
Sorry, Marcy, can you clarify your question?
Okay, so it looks like Bill 168 is amending 3.48.466C. And that section applies to a property where the homeowner resides and qualifies for the home exemption, where I think 3.48.466A refers to properties that aren't owner occupied. So I was just concerned that's what I was wondering, is the intent just to give it to those properties that are owner occupied? Or is it to give that exemption to both groups of properties?
Corp Counsel?
Yeah, sorry, I think that I'm reading it differently because the section that talks about the property owners that also qualify for a home exemption is under C2, correct? Right? Am I reading that correctly? And this is a new subsection 8, which means that the section above, so A is conditioned on the list on C. So it's not adding a new subsection to C2, it's adding a new subsection to C.
Marcy? So do you support this? You don't support this? You have ideas, suggestions?
Yeah, C2 is for people who have the home exemption.
Oh, I can answer the question.
Okay. Member Rollins Fernandez?
Hello, Chair. So like the existing code allows, if there are two properties or multiple properties, more than one property or more than one dwelling unit on a property, and the owner lives on that property, the owner can also qualify for the long-term rental exemption for the second property. And so that's what that section was intended to address. But if you see issues with the language, let me know, and I can amend it. I want it to read the way that I'm explaining it to you now. So if it doesn't, then let me know and then I can amend it.
Before I call on Mr. Johnson, do you have a comment or reply to the council member?
Yes, I guess I was wondering if a property doesn't have the home exemption, would they be entitled to a larger exemption if they were renting to someone who was at 70%? Or is it just for properties that are owner occupied?
Member Rollins
No,
Fernandez?
the intention was to give more of an exemption to properties that are, I think it's like an additional 100,000 to properties that are renting at the 70%.
So then my question would be,
Whether it's a property that only has, you know, a long-term rental unit on it, or whether it's a property that has both an owner-occupied dwelling and a long-term rental.
okay, then my question to Corporation Counsel would be, does Section A need to be amended?
Mr. Shikio?
You mean, Chair, Director Martin, do you mean in order to add owner-occupied property or a property that has both an owner-occupied unit and a long-term rental unit? That Section 8 is missing that section? Is that what you're saying?
Ms. Martin?
No, I thought this amends Section C, which is just for owner-occupied property.
Mr. Shikio?
Well, yeah, sorry, Chair. I believe the
Okay,
section.
Chair, we can defer. It's fine.
Yeah, well, I believe the Section C. Okay, sorry, I'm gonna have to think about that one for just a bit.
Okay.
Yeah.
Why don't we defer this one?
I hear what Director Martin is saying, and I can look at it again.
Okay, then we need a motion for Bill 169.
Okay, I move to Bill 169, 2025.
Okay,
Second.
okay, moved by Member Rollins Fernandez, seconded by Member Johnson to recommend first reading on Bill 169. Discussion? No discussion? Everybody understood this?
Yeah.
All those in favor of the motion, please raise your hand, say aye.
Aye.
1, 2, 3, 4 ayes.
Aye.
4 ayes. Motion carries. So Bill 169 is done. Any objections to deferring Bill 168 for further discussion? Yes, Member Sugimura.
So 169 and 168 are not signed by Corp Counsel.
Ms.
168
Toshikio,
168
you have a
deferred,
question?
Yes, Chair, thank you. Yes, so for Bill 169, we did not receive it yet for review, but I did a cursory review and then I've listened to the testimony. I don't believe we're going to have any legal issues. We are going to review for formatting and
Okay,
et cetera.
thank you.
But, and if there were any changes, it would be in time for first reading. And Bill 168, I did review this, but I only signed it yesterday.
Okay.
Thank you.
Very good, everybody. Thank you. Thank you, Member Rollins Fernandez, for joining in long distance. Yes, we have more work to do on 146 and 142. And if you go home and think of some great ideas, feel free to write them down for our next meeting, because this meeting is adjourned. Thank you.
Wow.